afternoon, everybody. Welcome to the Tuesday edition of the CLBA webinar series. We have a great afternoon lined up for you with a couple of great presenters. Excited to get that kicked off. But first, a little housekeeping on our end. March 17th, not only St. Patty's Day, the kickoff of our registration for the 2026 Conference and Expo, which is in November 2nd through the 4th. We're going to be at the JW Marriott in Indianapolis, which, by the way, I think the Combine is going on right now down in Indianapolis, which is really cool. They have a bunch of other great stuff going on this year down there, too. NASCAR in May, and then the Final Four game is going to be played there also. So it's going to be quite the sports town, and we're going to have the honor of going down there and having a conference, too. With that said, we have Stephen Ballard, Jacob Thurn, RCN Bridge Loan Networks. We got these guys going back to back today to talk about a bunch of new things that are going on with both companies, as well as some other great stuff to share with you guys. Stephen, I just sent you a notification to share your screen. So if you get that, go right ahead. And as usual, guys, this is all recorded. If anybody wants a copy of it, please let me know. Other than that, I'm going to turn this over to the gentleman. If any questions pop up, did you want me to hold them to the end, or did you want me to ask them as they pop up?
I've got no preference. Either or is fine.
Yeah.
I think
Okay.
if it's a relevant question to what we're speaking on, feel free to fire it off.
Yeah.
Sounds good.
You know us well
All right,
enough.
gentlemen.
We can
Perfect. I'm going to put my phone on mute. I'll let you guys go. Thanks, guys. Go right ahead.
Thanks, Scott.
Cool. Can you guys hear me? We good?
Yes.
Yeah, you're good to go, Steve.
We're good to
I
go.
wanted to double check. All right. So my name is Stephen Ballard. I've worked with RCN Capital for almost 9 years now. I've worked with Scott for a long time. I've worked with Jacob for a long time. Been in this industry a minute. So we're going to dive into some stuff that's a little fun today. One of the conversations that we have the most often with brokers is like, hey, I'm really trying to go and generate business. I'm trying to generate interest. I'm really trying to grow this, right? And some people will have that conversation and they are just starting and they're really just starting to drive business. And some people will have that conversation where it's really about they're trying to drive more business than what they have right now. So last year, when we talked and did a presentation with CLBA, I talked a lot about like, hey, if you have no business coming in the door, if you have no leads coming in, here's a few things you can go and do about that. So this year, I wanted to kind of transition in terms of saying, okay, you've got interest. Now, what are you going to do? This is not a very promotional thing. That's not Jacob and I's forte. We are, good salespeople, and we can do that if we need to, but that's not really what we come here to do. The goal of this is stuff that should be able to help you, not just with RCN and Bridge Loan Network, but stuff that should be able to help you with any lender that you work with and just running your business in general, right? I can show you examples of how that works with RCN, but that shouldn't be the only time that you go and implement this. Most of you guys are not just working with us. You're going to work with multiple lenders across a couple different asset classes, and a lot of this is supposed to be able to help you no matter what you're working with, right? So as you have that larger pipeline and things might go here, here, and here, a lot of it is universal concepts. That's what we're trying to focus on. So I want to kind of introduce a little bit. Jacob is the business development guy over at BLN Software. So BLN Software is a kind of sister company with RCN. And they handle all of the software for our loan origination system and a whole bunch of different pieces. So he's going to kind of talk on that for a little bit. And he has been by my side with this industry for a while. So have Jacob come and say hello for a second.
Yeah, it's actually been 8 years now, Steve, that we've been doing presentations like this together, which seems kind of crazy. But yeah, we're both really excited to be here in front of you guys today. And to echo some of Steve's points, we're really talking about industry best practices today and just kind of things that are going to help you guys take that next level in your business. And yes, it's applicable to working with us, but it also is things that you could apply pretty much to any lender, any type of business that you're working on. But really just want to help you guys out. Really, we're in the mindset of the better that we can do for you guys, the better business that you're going to be able to bring us, right? So it's helping everybody. We really want to be an open forum for you guys. If you guys have questions, please feel free to throw them in there. Scott will stop if it's something that's relevant to that point. But really appreciate your guys' time and being here. And please, again, feel free to ask any questions that may pop up.
And you'll have both of our contact information at the end. Both Jacob and I have a team around us, and so we'll introduce you to some of the team as well. So that way you might hear from different people if you go and reach out to us and one of us is traveling or busy or whatever. So I'll have all that stuff towards the end. Ready to dive in? Let's do this.
Let's get it.
Let's have some fun. So the assumption we're making going into this presentation is that you have some interest in your business. You've generated some leads, you're having some conversations. But now the big question is, how do you actually handle it, act upon it, keep everyone happy, and keep them wanting to come back to you over and over again? Because ultimately, this is about transitioning from I do a deal occasionally to I have a consistent engine that is bringing me business and closing more loans and bringing me more business and closing more loans. And that's what you want to try to build, right? This isn't going to be rocket science to any of you guys. This isn't going to be some like crazy concepts. A lot of this is very actionable stuff that we want to talk with you about. And it is all about trying to go from these boom and bust cycles of you get a whole bunch of leads, then you focus on closing loans, then you get a whole bunch of leads and you focus on closing loans again. And you have these constant fluctuations, and we're going to try to smooth that out a little bit, right?
And I would just say too, Steve, as we're going through everything, one thing to keep in the back of your mind, the easiest way to start this cycle is repeat clients. If you can get somebody through the door and keep them satisfied, they're going to keep coming back, like Steve said. And that's just the first part of that cycle, right? You get a couple repeat borrowers, it keeps everything, the lights on, so that you can go out and be a little bit more aggressive, be a little bit more experimental in some of your other approaches. So just keep that in the back of your mind as we're going through here. That's one of the fundamental things about building that cycle is repeat business.
Yeah, for sure. And it's honestly, the more you work with repeat borrowers, the less work it is too. You've already got a lot of the documents you need. They already know you. They already know a lot of the process. Like, it just becomes a smoother and easier thing to do. So before we dive into anything else, we're like a couple minutes into the presentation. I always like to start off conversations like this. Who is this for? So the conversation we want to have today is specifically for people that are getting consistent leads and interest, even if you aren't getting as many as you want, or it's not as smooth and easy as you want yet. That's okay. We're going to talk a little bit about how to fix some of those problems, but this is specifically targeted for people that are getting consistent leads and interest. And on that, we want to say, who is this not for? If you aren't yet getting consistent leads in your business, or you're not actively doing a lot of marketing, that's okay. But you're not going to get as much value from this presentation, right? I did a conversation last year that Scott can probably pull up and share for people. We probably still have the recording for that. If not, I at least will still have the slides for it. I can do it again if you guys want. Just diving into how to actually generate interest and leads in your business. But if today's conversation isn't for you, don't worry. You can still go back to that and start to generate some more leads in your business. But if you are getting that consistent lead flow, but not everything's clicking yet, or it all still feels really hard, you're spending all this time and effort diving into all of this stuff, that's a lot of what we want to talk about, to try to, how do you turn this from just a side gig that seems to take all of your extra time, effort, and money, even though it was supposed to give you back time, effort, and money, and trying to go and fix that so it actually works within your life rather than just kind of controlling and dominating. All right, so a couple things. I want you guys to let us know, whether in the chat or fire it off to Scott, or any of these things that you guys are seeing right now. You have a lot of leads and interest, but you don't really know what to do with it now. You're kind of struggling to get those loans to close. You're struggling to get applications in. You're working really hard in the business, but it doesn't seem to actually go anywhere. It just kind of feels like you're on a perpetual hamster wheel. You're talking to a whole bunch of people, but nothing's happening. Or you're having trouble staying organized. This is especially difficult when you first start out and you don't have all the systems, right? Then the last one, you're closing some deals, but it's not enough for you to quit your job and really dive into this. So if any of these are things that you guys are struggling with, let us know. That's a lot of the stuff that we want to try to dive into and solve, right? These are the real problems that you're faced with, and that's really what we want to focus on.
And if you don't fall under any of those categories, let us know what the secret sauce is, please.
Fair enough. We're gonna have you do the next presentation if none of this applies to you. So I can say that this still applies to us, right? There's still some of this where like sometimes you get stuck on the hamster wheel, sometimes you're having trouble staying organized, all of that kind of stuff comes up, and it's still something that like I have had conversations in the last couple of days about like how do we improve some of these pieces, right? So this never really goes away. So what's the goal for us today? We want to figure out a way for you to close more deals in the same amount of time or close the same number of deals with less time. We want to find ways to increase your conversion rate. We want to find ways to increase repeat business. And we hopefully want to find a way to turn this from a side gig into a brokering business with that consistent engine, where the more leads you get, turn into more deals you close, turn into more leads you get, turn into more deals you close, and it keeps going round and round. And a huge chunk of that, like Jacob mentioned earlier, is about repeat business. That's not the only piece, but it is a huge piece that kind of turns this into one wheel instead of just this perpetual feeling like you're trying to catch up, you know? So ultimately, you want to close more loans, less time, creating more revenue for you and your business without you needing to put in more time and effort. But as I'm sure all of you are thinking right now, isn't that what literally everyone promises, right? And absolutely it is. So let's talk about some actual actionable, I should not have tried to combine those in my head, advice that I can go and give you guys, and Jacob and I can kind of talk through here. So when you are getting a lead in your business, the first thing that you have to know how to do is to figure out how to quote that with confidence. You need to be able to quote out a loan. You need to be able to get it right 95% of the time. You need to be able to do it quickly and ideally with zero input from the lender that you work with. And you need to be able to do it without having to go back and forth with your account rep for days, right? And whether that's like, hey, there's just guidelines that you can go and price to, or there's a pricing sizer you can use, or you've just done enough of these scenarios over the years where you can start to quote it confidently, any of those solutions are fine. But you need an option where as you are on the phone with the client, you can talk through what that deal is going to look like. And obviously there's some asset classes where it gets a little bit more complicated, and that's fine. But you need to be able to answer something to some degree, even if it's going to take a little bit to underwrite things, right? And so with that, one of the solutions we give is we go and provide a pricing calculator for that. But no matter what lender you work with, you need to make sure that they have an answer to this. So that way, when you are talking to a client for the first time, or when they're bringing you their first deal, you can go through and say, here's what we can do on this. Because when you talk to an investor, what are some of their first questions? What's the interest rate going to be? How much am I going to have to bring down, right? What's the FICO score I need to have? Do I need to have experience or not? All these kind of questions, like you need to have answers for those, right? Even if you have ranges, that's still okay.
Yeah, Steve, a couple things that I'd like to tack on to what you're talking about here. First is, obviously, you guys have heard the term speed to lead before. I feel like there's no industry where that is more true than what we do. When we're talking about these investment real estate mortgages, most oftentimes these borrowers may have a lender that they've worked with in the past that's always in their back pocket. If things don't work out with you as the broker, they know they can always fall back there. So being able to quote them out accurately early on, and being able to set those hooks in to follow through without the rest of the transaction is going to be a really big thing, especially to help start to create that repeat business. If somebody knows that they're going to be trustworthy of you, they're going to be reliable when they reach out, you're going to have an answer for them. That's a really big thing to getting their trust early on, right? And winning some of that initial business. On the contrary to that, if it is something that you cannot do, say no early. This is one of the best lessons that I think we can teach anybody, because the longer you drag your feet about something that may be borderline or something that you may not be able to get done, it creates a bad taste in the client's mouth, right? And what you want to do is say no, but educate. Hey, this one might not be a fit for us, but if you had something that looked like this, and give them an example, I think that's really important. That allows them to know what to bring you in the future. And it also paints you in a picture that you know what you're talking about, right? You know that these things are borderline, and you know what actually will be able to get closed. So I think in both regards, right? If you're actually moving forward, you got to be able to answer those questions early on. If it's something where it may not be something you're able to fund yourself, you want to actually let them know that as early as possible.
100%. So some of what he was just talking about right now, why is this all helpful? You can get back to clients faster, like he was mentioning, right? That fast no is helpful just as much as the fast yes, right? You come across as more of an expert. You get back to clients with more accurate information. And then the bottom piece, you can move the process along faster. That's going to mean that you are able to move forward on loans that have shorter timelines. Because now all of a sudden you don't need to spend 2-5 longer days on just quoting things. I'm just trying to figure out, is this the deal that works? If someone has a 30 days to close, for example, your average, 1 to 4 family real estate contract, they have 30 days to close. Average closing times that we're seeing are like 25 days, right? You can't spend 5 days going back and forth trying to negotiate on quotes. That's eating up every last day that you have of margin in case anything weird comes up, right? In case you have issues with the appraisal, in case you have issues with title. If we can get this stuff moving sooner, you'll lose fewer deals because the client couldn't get everything together in time, right? And especially on the case where a lot of clients are having to make offers fast on deals that are available because inventory is really low. If you can't quote quickly, they'll go to the guy who can, even if that guy is a little bit wrong, right? Because for them to be able to get a fast answer back matters when they might have to make an offer within hours. And that's a lot of what we've seen over the last few years, is that time where an investor has between when something is available to when they have to have it locked down by is compressing a ton from when we first started. It used to not be a big deal to wait a handful of days to go and make an offer on a property. And now it's kind of tough to wait like an afternoon to make an offer on a property, right? Especially the ones that are good where the numbers work. People jump on these fast. So we need an option to go and help the investors that we're working with to be able to make sure that they can jump on it fast too, right? So here's an example of how we do this. This is not about RCN promoting, hey, we're the greatest in the world. This is just showing you guys, like, here's kind of some of the options out there, right? So we have a pricing calculator you built that's built in. You get it for free. It would have your branding, not ours, on this, obviously. But it'll ask you a couple questions, and then you go through and it asks you questions. On the left-hand side is your DSCR programs. These are your 30-year rental loans. And on the right-hand side are your short-term loans. I don't need to spend a ton of time going through every single thing on here, but credit score, zip code, current value, purchase price, a lot of this stuff you're going to expect. Rental data is going to ask you for market rents, actual rents, all of these kind of pieces. You got to ask taxes and insurance. All of this is trying to establish a monthly cash flow, right? And then on the right-hand side, we've got experience, credit score, current value, expected purchase price, expected ARV, expected renovation, and we've got some ideas about like whether it's a more extensive renovation or not, right? These are all questions that you now know to ask on the first conversation you have with the client, right? So you know if it's a fix and flip, okay, it's going to be a short-term rehab deal, and so you know what questions to ask. If it's going to be a long-term deal, you know it's going to be a long-term rental property, and you know what questions to ask, right? So even if you're relatively new, even if you're struggling to get some of these leads to convert, you know what questions to ask. By the way, you can still use this sizer. You can still use this pricing calculator to go and just ask these questions to real estate investors, even if you don't end up bringing the deal to RCN. you still know what questions to ask. They're right here on the screen, right? This is what almost every lender in the industry is going to want to ask. This is what they're going to want to know, right? Jacob, thoughts before I jump?
I would just say that, you know, the short-term loans, we ask for a little bit more just because it asks, you know, those things are actually what incorporate into the pricing that you would receive at the end of the day. But I mean, 10 things really is all we need to get pricing. That's really not a big ask, right? If somebody's actually interested in doing an investment property, 10 items really isn't a big ask to be able to get quoted out. So I think it's super powerful for you guys as the person on the other end of the phone to be able to do that in real time and give them an update. And then again, this also could be a way to educate. This could educate yourself on what programs can work, you know, this one specifically to us and how we operate. But if you're using these tools, you can really use them to educate yourself, other employees, or if you have a deal that doesn't quite fit, you can make those adjustments and show in real time how it actually could work out in the future.
Yeah. So one of the other things is knowing what programs your lenders offer, making sure you have an option for every client you talk with. All of this is about increasing conversion rate. All of this is about making sure you're converting clients you weren't previously able to help. That comes from being able to price out deals quickly, smoothly, accurately, right? And whether that's with RCN, whether that's with another lender, whatever the case is. Because for example, if you go to price out a 30-year deal with us, the lowest FICO we'll take is 680. So then if you go and look for other lenders in the space that might do loans to people under 680, you know, 650 to 679, maybe even sub 650 on like 30-year loan rental properties, now you know a bucket for some clients that you can't help through an RCN or through some of our competitors, right? So you know a lender to go and look for, giving you more options, giving you more reasonable situations where you can go and get pricing established for, you know, the clients that you're talking to, right? So even if this isn't something where like you can do it live, but it gives you a better idea of what people's guidelines are. And that's one of the next things we wanted to jump into is like, you have to be able to understand the guidelines of every lender that you work with. It doesn't mean that they have to be shared with you word for word with what the internal guidelines are that they operate with. But you've got to have a pretty good idea of leverage, closing costs, down payments, interest rates, documents required on every single loan program. That's the difference between like, okay, I'm generating some leads and like 1 in 100 are closing, because some of them are asking questions that I'm not ready for. They're asking me for down payment on the first call. They're asking me for interest rate ranges on a 30-year DSCR loan, for example. It's like, okay, if you don't know what those are at right now, because those rates change, they follow treasury notes, right? So if those change, and the last time you priced out a 30-year DSCR note was 6 months ago, the market has changed. You don't know the rate range anymore, right? And so it's not just learning that once, but it's staying on top of a lot of that. At RCN, we have a training program that goes through and does exactly that. You're going to see interest rates on the website. You're going to see leverage on the website. You're going to see, you know, all of that stuff there. But then also we have a training program that is just about what we do. So it's our guidelines, our loans, our process, our programs, all that kind of stuff. And that's available for free. So you can go and check like, hey, where are things at right now in the market? Where are things at right now with what RCN can do? And all of that has case studies you can go through and make sure that you understand it from practical application. And yes, we have document lists with explanations in there too. So that way you know, like, okay, so why do I need, for example, rents? Why do we need rents before we order an appraisal on a 30-year rental property? Well, the way that we underwrite 30-year rentals is based on month-to-month property cash flow, debt service coverage ratio. That's what a lot of people use, DSCR. And so we need to have the rents before we can go and order an appraisal, because we need to have an idea as to what are the market rents in that area and are rents accurate. Same thing is true for why do we need a renovation budget before we go to order an appraisal. All of these kind of explanations are like in that program in Amplify that we have available to you for free. But this needs to be true of every lender that you work with, right? You need to feel comfortable pricing on the phone. You need to feel comfortable answering follow-up questions around leverage, closing costs, down payment, interest rates, documents. That's going to help drive your conversion rates way higher than where they have been at. It's all about becoming more of an expert. This is part of the reason why you see a lot of the top brokers only work with a few lenders, because you can't know every single nuance of 40 different lenders, but you can do it for like 3 to 5, right? Jacob, thoughts before we dive into our process?
No real comments on what you mentioned there. I love everything that you said. I think, as silly as it sounds, using, learning mechanisms like flashcards or scenario builders are really great ways to really help identify what loans might fit for a specific lender that you're trying to work with. One thing that I suggest to everybody that works with us, specifically utilizing our calculator, is saving what I call cookie cutter deals in there. And these are just like just scenarios that you would get, very generically, right? A fix and flip that maybe totals out to a $250,000 loan amount, a DSCR that's a cash out refinance for, whatever. I just think having those and saving those to your calculator, it allows you to kind of paint a picture of what can work. And then, as Steve said, it allows you to stay educated on when those rates change, what those new rate ranges look like. If I have this type of a borrower, what range do they fall in? If I have this type of a borrower, what bucket do they fall in? And, like I said, our tool allows you to save those scenarios and revisit them at any time and run a recalculation on them. So it's really easy to be able to do that with us, but you need to have some type of a mechanism like that to just keep yourself informed.
Yeah. And you need to come back to it often. Just one of the pieces of what he was saying that I want to really emphasize, like, this stuff changes. I cannot tell you how many rate changes I have seen over the last almost 9 years of doing this. It's crazy, right? It changes all the time. Down payments change, closing costs change, leverage changes, what becomes normal in the market changes. When I started, there were hard money lenders locally that were doing 5 points and 20% interest. That doesn't really happen anymore, but it did back then. And so knowing what's even competitive across other lenders that you might be comparing yourself to is important, right? So I threw this one in here for people that want to kind of get a little bit of a feel for what it looks like at RCN. It's relatively simple. You get an initial quote, application, documents, processing, underwriting, closing, and then everything enters servicing, right? We will guide you through the entire process, but the important thing is, you want to know how to do all of these steps with any lender you work with. How do you do an initial quote with a lender? How do you handle the application? What documents do they collect? When do you need them in by? Which differs for everyone based on how fast their underwriting process works and what else is going on. Depends on whether or not they need an appraisal. How the processing part works. Some of that's related to document collection, but not all of it is, right? Do they do hard or soft pulls, right? Do they require bank statements? If so, how much? Do they require tax returns? If so, how much, right? How many years? How many months? You need to know how the underwriting process works, as well as timelines, what might come out of it, how often you might get exceptions, how often you might get counter offers, how often you might get like, hey, we'll do it, but we don't want to do it at the leverage that you guys had priced originally. This kind of stuff happens in the industry, and you want to know what's going on and what's happening there and how to handle it. And then the closing process, there's usually not a ton that you have to do as a broker during closing, but guaranteed, if your borrower has a question the day of closing, you want to make sure that they can call you and that you know what's going on. You want to make sure you know what title company that they're working with, if they're supposed to go in person, where they're going in person. You want to make sure that you know whether it's a remote closing, if anything of those things that are going on, right? This sounds wild, and it sounds like you shouldn't have to check on this, but also check if your borrower is suddenly traveling international while their loan's closing. It happens to us multiple times every single month that we get a message that's like, oh, by the way, we have to close by Thursday because this guy has a flight to Australia on Friday morning. And you'd be like, really think I would have pushed that out until after my loan closed if that was me? But that kind of stuff happens. And so knowing what's going on and knowing what the expectations are, not just with us, but with anyone you work with, helps you a ton. Because now when the client goes, hey, are we going to be able to finish this before I have my flight to Australia Friday morning? You can go, that's a problem, and I got to let the lender know right away so we can figure out a solution for you, right? Rather than, it should be fine, and continuing on. All of this is going to seem like really simple stuff, but I promise you, Jacob and I see deals killed for things that are this silly and
Avoidable.
far worse, right?
Yeah. And I would just say too, early on, this is stuff that you guys will get more familiar with the more deals you actually do with a specific lender, right? But early on, the real question you want to be answer is, what is this process? Not detailed what happens on each step, but if I'm a client and I ask you, all right, so, you get me quoted today, what do we look like after that? You need to be able to say, okay, we get the application signed, and I'm going to need to get another few documents from you up front. Then the lender's going to let us know a few other documents that they're going to need to get us through underwriting. Then we're looking at a closing date of blah, blah, blah. So it's really more setting the foundation of that. Obviously, like I said, over time, you'll get, very expert with each lender about the timeline and maybe where each of these steps will happen in that process. But more so, you need to be able to convey what the overall experience is going to be like working with you and the lenders that you work with as a brokerage.
Yeah, it's all about setting expectations. And if you don't know, then you can't set expectations. And when borrowers don't have expectations, when your clients, you don't set the expectations for your clients, they have stuff that they're thinking is what's happening, and you don't know what it is, right? If you know that something's going to be a problem in 15 days, you can let them know now rather than the day that it's a problem, right? Again, this stuff is going to sound silly, but a lot of it helps a ton when you really start to master it. And early on, lean on us. Lean on whatever lender you work with. Say, hey, I'm talking to a client tonight. If that quote works, what do we do next? And then the lender can be like, okay, cool. So here's what the next steps would look like. And then you say, okay, cool. If that works, what would we do after that? And you get an idea of what every step would look like up until closing. And again, you don't have to have it at crazy detail like Jacob mentioned, but just a rough idea. So that way, when your client asks, okay, cool, I think I wanted to move forward on this. What else do you need from me? You're not sitting there like, all right, well, let me go talk to the lender and I'll find out and I'll get back to you tomorrow, right? You're immediately saying, cool, so send me over a rent roll that you have on this property and we can get things started right away, right? Makes it a lot smoother, a lot easier. You can kind of go and set those expectations. Now,
hey, Jess, I got one question for you if you guys are okay with that.
Yeah, fire away.
Flo, come on in.
Thanks, Scott. Hey, gentlemen, thank you for doing this. Curious about a closing that coincides with a client traveling out of the country, because I had this happen last year. My client was literally at the airport going to the Netherlands while we were trying to get her to sign closing documents. The lender was not willing to overnight them to her to the Netherlands, where she could have a local notary witness her signature. But they said if she could get to the US Embassy, they would send the documents to the embassy. She could go to the embassy and they would notarize. Is this something that you would accommodate?
Yeah, and it's something we see on a regular basis. Like, we probably close at least a couple international closings like that every week. I would say in your average month, we're probably in 10 to 20 of them that we see. And the vast majority of those times, it is signed at US embassies, because we can go and send the paperwork there. We can go and verify. We can have it function like a notary, and it works pretty well.
Okay.
Generally, that's how we handle it. Jacob, anything else you can think of on that front?
I would just say, if this is, and again, this is why you want to ask these questions early on in the process. If this is something that we can account for early on,
Yes.
It's best to let the lender know as soon as possible, because it is something that takes a little extra effort. It may take a day or two as well to prep. So it's really just a matter of making sure that everybody's on the same page. Obviously, we want to try to find this out as early on in the process as possible.
And please
Great.
tell them not to be on a plane the day that they're trying to sign it.
No, yeah, I
Right.
was trying. It was,
That sounds like that shouldn't be crazy advice, right? But
Yeah.
like, okay, if they've been in the Netherlands for 5 to 7 days and now they have to go to the embassy to go and sign some documents, that's not as big of a deal. But if we're
Right.
like, hey, the closing day is Thursday and they're trying to land Thursday at 7 p.m., it's like, okay, now you've got to try to rush to the embassy and hope that they're open, and like make sure that they plan to give themselves some time. For whatever reason, people love to fly on the day that they're trying to close documents or the day before and after, and they pretend like plane delays are just not a thing. And as someone who travels way too much, I can tell you that they get moved all the time, right?
They do.
So try to plan around that. A lot of times your borrower's not going to, and so try to manage those expectations.
Great.
Honestly, I sometimes even ask people like, hey, you've got a compressed timeline here. We got to close in 15 days and 20 days, whatever the case is. Do you have any unexpected trips or travel or days that you won't be available that I need to account for? Because even if they're traveling domestically and they're going to be able to get back and sign, for example, if I need them to sign off before I can order an appraisal, but then they're not available for 4 days, it's going to be hard to close in 15, right? But if I can get them to sign off on things today in an hour or two, then to go through and get stuff in place is not as big of a deal, right? So signing internationally is a big deal, but also just being aware of those kind of things that's happening with your borrower. And you can just ask them, like, hey, I've run into issues before where people are traveling. Do you have any trips coming up that I need to plan around with the lender to make sure that if we need stuff from you, we get it before you leave on that trip, right?
Great. Thanks a lot.
Yeah, no problem.
Now, guys, I have one more question for you, if you're okay.
Don't tell my team that, because my team will ask me for stuff the day that I travel for work, and that's a different story. But Scott, you had another question?
Yeah, Donna, are you out there?
I sure am.
There you go. How are you?
Hi, Scott. Hi, Stephen. Good, and yourself?
Good, thank you. Go right ahead.
Good, good. So my question is along the same lines as what just came up about a U.S. investor going abroad during the whole process. Do you guys work with foreign investors that live out of the country? Okay, so I work a lot with Israeli investors, and I have a couple lenders that will allow them to close outside of the U.S. using an apostille notary, because getting a signing at an embassy in Israel or a U.S. notary could be months out. And I actually lived abroad in France for a time, and I needed to have documents signed, and I waited about 2.5 months to get in. So you can't always get in quickly. So can they use an apostille notary, which, you know, basically is they go to a local notary, their local notary signs the document, and then and the notaries there are much different, right? They're attorneys. They're not like notaries here, so they're different kind of people. And then they take the documents to an apostille, which is, a very formal process. So the notary takes the documents there, the notary verifies that's really the notary signing the documents, and it's a whole formal process. You guys allow for the apostille notary?
I don't know off the top of my head, but we do a significant number of our closings are investors from Israel, right? A significant number of the international closings we do specifically. So I don't know off the top of my head, but it would kind of surprise me if we don't, or it's something where people just have to plan like well in advance. But to give you a better answer than that, I will check with our legal team, because like I said, I know it's something we run into all the time. Unless Jacob, you know off the top of your head?
I don't know the answer off the top of my head, but I think as a teaching point, one thing that, is really great is things like this that might be a little bit out of the box. You can get a lot more clearance from lenders on things like this, the more business you've done with them. That's why working with the same group of lenders can be super valuable. We, like Stephen said, we work with Israeli investors, foreign nationals all the time. This is probably, and just because we don't know it doesn't mean it doesn't exist, but this is probably something that we already have built into our process to allow for exceptions like this. So even though we don't have the answer right here, I know Steve will get it for you. I would say work with lenders that are flexible on items like this. If you bring us a certain amount of volume from the same client, we're gonna work with you on that.
Because I've actually lost investors, Israeli investors, because I closed a lot of loans with Israeli investors, but then the lender might change some guidelines, and so that means I've lost that lender for certain of the investors. So, but I'm constantly getting referrals, so I'm always looking specifically for lenders that can do foreign national closings using an apostille notary. So,
Yeah, we'll
yeah,
try
do
to
you want
get
me to
the
reach out
answer.
like in the background here?
Yeah, that'd be great. If not, I'm gonna try to get the answer before we get off the call here.
Jacob, while you were answering, I was shooting a message over to Roberto. So
All right,
Roberto
I'll
runs
hold
our
off on that.
closing team. So
And just so you know, I've been working with Austin over there
Okay, great.
at
Yeah,
RCN.
you're in
love
good
Austin.
hands then. So we should have an answer from him. I saw him start to reply for a second there. He
Thank
doesn't
you.
know that I'm doing a webinar, so he might not.
I
do it.
would also just say I know anecdotally Austin does work with a lot of foreign national borrowers as well, so he's got experience in that ballpark.
Yep. So we do have confirmation. You can get notarized documents authenticated through the apostille process because they're part of the Hague Convention. So
Nice. Okay. And do the investors need to have a credit score in the U.S., or is it okay if they don't have a credit score? Because I have some lenders that allow them to close with an apostille notary, but they still have to have a U.S. credit score. And, you know, a lot of these investors do not have a credit score.
usually,
It's like a
we
catch-22.
Yeah, so usually we don't require a credit score for foreign nationals, but I'll double check with Roberto as well. Do they have to have U.S. credit score by any chance?
And lastly, are they able to self-manage, or do they have to have a third party? Because a lot of these investors like to self-manage using like the high-level version of, not TurboTax, but the rental program, and it's paid, and it's, you know, it's a very formal process, almost like can accomplish the same things as you would by having third-party management company.
Okay.
So
Yeah,
yeah.
I'm not sure on either of those, but I don't see why we would need a U.S. credit score on that. But I just shot him a message to double check, and when I get a reply back, I'll let you know too.
Okay, and then just the property management, they can
Yep,
self-manage.
I put both of them in the same message.
Awesome.
Cool.
Thank you.
Yeah, of course, of course.
Thanks, guys. Larry Grant, are you out there? I know you had a question pop up.
I did. Scott, can you hear me okay?
Yep, go right ahead, sir.
Okay, hey guys. So yeah, and thank you for the presentation. Good presentation. So I've been in the business for a while and was curious to know, and you know, I think as a lot of us, we're trying to be good time managers and decide what deals to work on. So especially when it comes to loan sizes like under $1 million, which is pretty much where I think most, so I'm sorry, something's in my throat, where most of your loans lie. Can you give us an idea of these days where most of the brokers are pricing their fees to stay competitive? Sorry about my voice.
Yeah, you're good. No worries.
And you can do it by tier, you know, just to give it, like if it's a small loan, 100, 200,000, maybe versus, you know, 4, 5, or even 7, 8, something like that.
Yeah. So I'll kind of give you the basics. What I typically see is brokers charging anywhere between 1 and 2 points. 2 points tends to be your smaller deals. Your 1 to 300,000 ish, I would say, is kind of the rough benchmark. And then usually like $500,000 up to $1 million, people are closer to that 1.5 range. That's kind of the standard. Everyone's a little bit different. So much of it's like, what can you actually get the borrower to agree to and all that stuff. But that's roughly where I've seen the industry be at. You're going to see some exceptions to that, especially high experience borrowers. You're going to see lower closing costs, right? But it should also be easier for you because they know more of what they're doing. They have the documents ready, they have stuff ready. They're used to, you know, closing processes. Yes, they're going to have some more in-depth questions, but typically you see brokers charge closer to a point when you have high experience borrowers that are doing, you know, 1+ deals a month. You're going to see much lower origination costs for, or like origination fees for the broker. That's kind of what I see on average. Sometimes there's some options to have things be less closing and you make money out of the interest rate, which is yield spread. as an option, but that's kind of scenario dependent, but that's a lot of what I see. Does that answer your question?
Let me jump in a little bit too, Steve. I got a couple
take
things to add. So one thing I always talk about when we're talking about compensation is you guys as brokers, you should have some type of a minimum threshold. Like RCN, we charge a minimum $1,500 flat fee on all of our loans. If you know, half a point doesn't get us that, we'll round up a little bit. But we know that we're going to be compensated for us actually closing the loans, even if a client buys us all the way down to 0 points, right? So I would anticipate you guys having some type of a bottom line threshold. It might not be a specific point amount, but it might be a dollar amount, right? And then the other thing to consider is your work really going to change on a smaller deal than a larger deal? Sometimes the smaller deals are harder to get done than they are a larger one. So I wouldn't assume taking less points on a higher deal or lower points on a smaller deal is always the best case scenario, because your effort, your work may still be exactly the same. So I think, like Steven said, take it on a client by client basis is almost the best way to approach it. The other thing that you can do with us in our loan calculator that we brought up a little while ago is the ability to add on additional closing fees. So like if you had something that you wanted to charge that wasn't points, let's just say you wanted to charge a $500 document collection fee or something like that, you can tack those things on as well. And then we do also allow brokers to add on that yield spread that Steven mentioned with us as well. So if you've got a 12-month loan that you're selling and the client really cares about getting as little points up front as possible, you could theoretically buy that down, getting a higher rate, and then you could tack on a little bit on that rate and get paid every month of the life of that loan. Yeah. So that's one of the things that I really encourage people to do is utilize the pricing tools that are out there with your different lenders, and utilize those levers, if you will. Add some yield spread, buy down the rate, do the opposite, and just see where those things impact the total of what the total points and interest rate of the client that's going to feel at the end of the day. Because you want to take into consideration both what the client's going to have to pay to the lender and yourself as the broker.
Yeah. And a lot of times, like, there's more flexibility than you might realize. So you can always ask, like, reach out to our team and we can walk you through and say, hey, actually, you know, they have a quote for 0 points and 8% interest, and you're sitting there at 2 points, RCN's at 0, and we're saying we're at 2 points and 7% interest. Well, maybe we can factor in some of your closing points into a rebate. We can maybe structure things in like Jacob was talking about, and we can get some flexibility to go and price competitively with them, if that's the piece that the client's the most interested in, right? So it's a thing to ask up front. Hey, what matters to you more, closing cost or interest rate? What do you want me to try to get as low as possible for you? Which one of those two? Because I have some levers where I can choose one, or I can go with just default pricing, which is going to be kind of like a middle ground for you, right?
Well, and especially on the DSCR there, Steven, there are different levels that you can pay with, you know, interest only, prepayment options, et cetera, that can really, you know, get some flex there on the different options that are available. So if you guys are trying to beat a specific pricing, or if, you know, there's something that we are trying to match, super important that you let your loan officer know that, because again, there may be leverage that, you know, you might not to pull that we can kind of manipulate to get lower payments, lower interest rates. It depends on what the client's really looking for.
100%. All right.
I know that was a really long-winded answer for whoever it was that asked that question. I hope we got everything that you were looking for.
If we didn't get everything, it wasn't for lack of trying. Okay.
That's a true story, guys. Yeah, that was good. Well done, gentlemen. I appreciate that. That's all the questions we have for now. So go right ahead, guys.
Cool. So coming back from those answers, all of this stuff is diving into a lot of like nuance of how we like to operate and everything, which is helpful. But one of the things that I want to talk about, it seems like the part of the process that if you had to pick one, you'd be like, this should be the easiest part of the process. And it's document collection. It seems like you should be able to be like, hey, the lender says, I need these documents. Can you get me these documents? And then the borrower will say, absolutely. And then send you the documents you need when you need them. Now, obviously, those of you guys who have closed loans like this know that that's not how this works. So, shockingly, first, you want to have an idea of what documents you need to collect total, and then you need to have an idea of what order do you need to collect them in, and which ones are the most important or urgent. Because if you ask someone and say, hey, can you get me a list of these 15 things? What are the chances that you're going to get all 15 things? Pretty close to 0, right? So if you've ever asked a spouse, a friend, anyone, an Instacart shopper to go to the grocery store for you, how successful are they at getting every single thing that you put on the list? Usually not super successful. So if you give them 2 things to get from the grocery store, how successful are they going to be? They're probably going to get them both right. So if we know that we need 2 different documents day 1, and then we have 5, 10, 15 days to get the rest of the documents in, which ones do we want to focus on? Obviously, we want to focus on the documents that we need day 1, right? So you need to know which ones and in what priority. And especially this becomes important if you're managing multiple loans at once, because you can say, okay, I need to get these 2 documents on these 3 different loans to get those started today. And then once I pass those over, it's going to take a week or so to get an appraisal back. And in the meantime, then I can start working on these 3 loans where we already ordered the appraisal and we need some additional documents. And it lets you prioritize your pipeline. That's where things start to get a little confusing, right? So we have a list of commonly available documents. We're running a little short on time, so I'm going to skip over it. But if anyone wants to take a look, you can look through those. They're available in there. They're also available in Amplify. You got something?
Steve, I just want to tack on to one thing on that previous slide before you pulled open the docs that are needed specifically. You did it in your example, and I think it's super helpful to break this up into milestones, essentially. What are the documents that I need to get into processing? Typically, it's like a photo ID, an application, and maybe a credit and background authorization. Then what do I need to get the appraisal ordered? What do I need from then to get the appraisal ordered into underwriting? And then after that point, what do I need to get into to get to closing? I think breaking it up into those different milestones really allows you to have a better picture and prioritize what you're asking for. Because again, if you ask for everything up front, chances are you're probably not going to get it all in one shot. But if you kind of lay it out in a way where it's like, hey, get me these 5 today, that's going to get us to the next step. And always set those expectations. Hey, we're going to need 15 documents at the end of the day. But if we do it in these chunks, it's going to be a lot easier for everybody. And I just think setting those expectations is going to allow you guys to be a little bit more successful in this regard.
Yeah. So we're going to skip over these. You guys will be able to see them when we go through and give Scott and his team the PDF version of this so you can look at it a little bit more easily. Again, sounds like a simple thing, but how do you actually organize all this? This is less of a big deal when you have like one loan going on. But remember, everything we're trying to do is not about having one loan. It's about creating a consistent system that you can go and scale. So you need to have some kind of system that isn't just your email inbox. Please don't just store documents in your email inbox. That's going to be awful for you to manage. You need to have some kind of system where you can pull documents. You need to have some kind of naming conventions so you know how to find a document, how to find a specific person's document. At RCN, you get a loan number 2, which can be a helpful thing to add. But a lot of times, even just like name, property address, and then what type of document it is. Name, property address, bank statements can be a super helpful way to go and save documents, right? And one of the ones that I really recommend, especially with handling organization when you have multiple deals going on, a lot of this, you're going to have multiple email threads. These email threads are going to be related to very, specific loans or specific property addresses, especially on like portfolio deals. It can get complicated really fast. So you can have filtering rules that target based on property address, the target based on loan number or the client's name or anything along those lines to go and filter out to a very specific folder. So you know that every email that I give and receive on, Jacob's loan on 123 Main Street is going to automatically go to that folder. So that way I know, hey, everything's pretty stable right now at Jacob's loan. I got 5 days until I got to get all my documents in because that's when we're expecting the appraisal back. And so I can let that one sit for an hour while I focus on Dave's loan over here where I need to go and order the appraisal. And so I'm trying to get to his documents right away. It helps if some of that is separated out for you. right? And then with the folders, sometimes you can use the same documents more than once. So if you have someone, for example, that uses the same LLC for multiple different property purchases, you can now use their articles of organization or operating agreement or however they have everything laid out. You can use those kind of documents more than once. And so you can go and say, cool, so I just collected this last month on a loan for this guy. Let's grab it again. Hey, have you made any updates to this? I have your file from the last time. And if not, here you go. You can send it off to the lender because you already have it, right? It lets you more easily go back to everything, and it makes it a repeatable system. Repeatable systems are important because as you grow and scale, you're going to want to add employees. Employees can easily understand a repeatable system that you have hopefully written down that you can explain to them, right? And now we start to get into like training and how do we actually go and scale this so it's consistent. And a lot of that has to do with how easy are you making your job for yourself. These are very low hanging fruit things that you can go and do like today to go and make this process easier for you. If you need help for them, you can reach out and I will walk you through them myself, right? I might do a group thing if like 15 of you guys ask for help on it. But if like 1 or 2 of you guys want help on this, let me know. I'll set up a call. It's not that hard for us to go and set up places where you can go and store documents, set up a consistent naming convention, set up email rules, and then make sure whoever else you work with, if you have multiple employees or if you have other partners, have them follow the same rules. So if you are trying to help on an employee or a partner's file, they know where to find things and you know where to find things.
Yeah, I love what you're saying here, Steve. And I just think that this all lays a foundation to allow you to act faster, right? It's all about that speed. And it's funny, as you're talking, I'm imagining like a little game of tennis almost. The lender says, hey, I need these documents. And you, as quick as can be, want to hit that ball right back to the lender and say, here they are, back in your court. And allowing this foundation of having your documents in an area where you know they are, having them securely located, all that stuff is going to allow you to just hit that ball back faster to the lender.
Yeah. So, couple more things, real quick. Now, you've organized everything. Let's say you've gone through, you closed the loan, everything went perfect, you crushed it. The number one thing that people forget to do is to say, cool, we just closed a loan together yesterday. What's next for you? Do you have other properties that you want to buy? What are you doing on this property? Do you think you want to refinance this down the road? Do you think you want to add to your portfolio? What else is going on for you? That's the first question you want to ask. Then the second question, this is my single favorite thing to do on any file or with anyone in general, which is to say, hey, I think we did an amazing job there together. I'm glad that we got this closed. I'm glad that we got this done. I hope you're excited and happy about it. Is that how you feel? And if they are happy and excited about it, you go, cool. Do you know anyone else I can help? When you ask someone for that, you're asking for that referral. You are helping them close a loan, which is going to drastically change their net worth, their income, whatever the case is, depending on what kind of deal it is, right? You are helping them build wealth. You are helping them drastically grow their income. That is absolutely changing their life, especially when you do it consistently. And they're starting to build a larger and larger portfolio, right? When you ask them for a referral, you are saying, hey, man, do you have any friends you want to brag to about this deal you just did? And also they now get to do that and feel like they're helping you because they're doing you a favor by introducing friends to you that might need help on financing. And they now get to go and talk about this deal that they're doing to their friends. This is their favorite thing. Most real estate investors, if you ask them, it's like they'll talk about their deals and their children, and those are their favorite things to talk about, right? And so if you ask them like, hey, what's next in your business? And do you know anyone else? It gives them the excuse to go and talk about this stuff with other people. And it's giving you free referrals. It's giving you free introductions, right? You can choose to pay for them if you want. That's completely fine on the commercial side, right? Like we are, but it's giving you free business. And all you have to do is just ask the people that you know you did a good job. If you know that they're happy, the day that that loan closes, you go, hey man, I'm glad we did this together. This was good. Everything seemed like it went smooth. Do you know anyone else that I can help?
Yeah, I was just going to say
Hey guys,
investors are a super tight-knit community, right? They talk to each other. They're friends with each other majority of the time. So that would be a really great place to get additional business from.
Scott, I'm guessing we got a cut, right?
No, Martin had a couple of questions for you. Martin, are you out there, sir?
Yes.
There he is. Hey, Martin, go right ahead.
Yes, I was just had a query in regards to Amplified. Does Amplified or also if you can chime in as to which software could help us to upload, save, and draw documents out of it to share with clients or share with you guys. You know, and there's some softwares out there like Box, Dropbox, and others. I was curious to know what has been, based on your experience, what other brokers have been using to compensate for file management, document management, to maybe add a link on your email signature to where clients can upload documents securely from there. Just want to get your thoughts on that.
So Jacob, my guess is you're going to be the guy for this, but I can step in if you need me to.
No, I got plenty of answers in this regard. I think first and foremost, you have to ask about your company's infrastructure, right? How much overhead are you willing to dedicate to something like this, right? If the answer is this is one of the most important aspects of my business, which for you guys it is, I don't think there really is a limit like that. I think an enterprise system like a Dropbox type of prototype is a really great route to go. It's secure, it's safe, people know it by name. When you're talking about uploading documents that may have people's bank account numbers, social security numbers, and other sensitive data, that's one of the very first things that people think about. Am I sending this to something that I've heard of before? If I'm sending it to, you know, stevesdocumentwarehouse.com, that's not as known as a Dropbox or something along those lines. Now, if you work with specific lenders, like I know us specifically, our system provides unique secure URLs for each loan to upload documents to. So you guys are more than willing to pass that along to clients as well. If you are at the point when you are looking at a system dedicated to helping with your organization of all of your loans, not just document management, these loan management systems should have something for document management built in as well. So that's a question that I would ask if you're at that level. If it's something where you're just trying to supplement this specific need, I think something off the shelf like Dropbox or something along those lines fits perfectly.
Fantastic. Thank you for sharing that.
All right. So next, you ask for the referral, right? Whether they give you the referral or not, whether they tell you what's going on with their business next or not. Now we get into long-term follow-up. If you closed a deal with someone in December and you haven't talked to them yet at the end of February, you are doing them and you a disservice, right? It doesn't have to be a long follow-up. That can be a quick text, a quick email, just be like, hey man, it's been a minute. How's the project going? That can be the whole thing. You can give them a quick call and just be like, hey, how's the project going, right? Again, they get a chance to go and talk about that. That's helpful. But when you have people that you're talking to, whether they're converting at the first thing or not, you have more at-bats at talking to them. This seems obvious, but when you first talk to someone on a Monday, whether they reply or not, you can reach back out a couple more times, right? Especially if someone replies though, because we all do the thing where someone sent us a text and we open it and then we get distracted because our kids were doing something or our spouse asked us something or the people at work asked us something, and then we forget about that text entirely. We forget about the email because we clicked on it, it's opened now, I don't see the unread piece, and I forgot about it and we move on. We all drop it occasionally, right? And so know that that happens sometimes to your leads, your clients. When we were working directly with real estate investors, when I first started, now we almost exclusively work with brokers. But when I first started, I was doing some work with direct investors. And I found that I needed to talk to them an average of 3 to 7 times, talk to them, not reach out to them, And we often needed to look at anywhere between 2 and 4 deals before they found one that worked and they were ready to go and put in an application, right? They aren't likely to reach back out to you. So you've got to be the one to be on top of them. And it's so easy. This is the first thing that everyone lets slip off of their list, including myself, when you start getting busy and when you start closing loans. And this is speaking from experience. This falls off my radar first. This falls off everyone I know. This is the first thing to go off your to-do list, right? But it is the most important. And you can schedule this stuff. You can say, I closed a loan. Now in your phone, you can go and schedule a message to say, send this text message on this date at this time and press send later, and it will wait and send later. You can do that in your email. You can schedule things on your calendar. If you have a CRM or a customer relationship management tool, you can go and you can schedule messages or calls or alerts in there to go and reach out to people. It is the most important thing because they are busy with projects. If you talk to them and that deal that they were looking at didn't work out, they're looking at more deals, you should be reaching out to them a week or two later. But if you forget, you're going to miss out on the business, right? So don't make it about whether you remember. Try to find systems where you can go and schedule the long-term follow-up. It will make such a big difference to your business. I can't even explain it. Most of the biggest clients that I have brought into RCN, most of the majority, like these really heavy hitter clients, it's very, very few of them that I've talked to them one time, they're good to go when they start closing loans with us. Usually, I talk to them a half a dozen times over the course of 3 to 6 months, and then finally they go, you know what, man, I've been putting this off for too long. What are you doing tomorrow? Let's get this thing started, right? You have to kind of stay on top of people because ultimately you are trying to help them. And so you have to try to push them along that process sometimes. You don't have to do it in a sleazy way. You don't have to do it in a salesy way. You can genuinely just check in on people and be like, hey, how's it going? It's been a minute since I heard from you. Has anything changed? Anything I can help with? Right? It makes a gigantic difference. So if you're not doing it, this is honestly the single first thing that I would change in your business. Again, I say this as someone, I'm actively trying to figure out how to schedule all of this stuff into what I do right now to make it easier for myself because I so consistently am getting business from the 2nd through the 5th outreach attempt that it blows me away. Right. So a couple last things that we can wrap up on and then we'll have more time for questions. We have a bunch of tools that we can go and offer. BLN Software is Jacob and his team. They make available the loan calculator. They'll make available white label marketing materials. They have an application you can directly have on your website. You have an application link that you can share with people. You can actually get access to the loan origination system. You get a million different pieces that will all actually help you as a broker. And him and his team can walk through and see like, hey, here's what's helpful for you, right? So the guy who's just asking a question a minute ago about document management. We got a few different options built into the system to go and handle that, but also here's some options that might work for you outside of the market, right? Jacob, anything you want to say on this before we dive on?
Nothing about this crap that you have on the screen, but what I want to tell everybody is some of my favorite conversations are just when people call me up and ask for advice on a number of different things in our space. To Steve's point, if you call me up and you ask me my best document collection tools, I'll spend 15 minutes talking with you about them. And that kind of is the mantra for everybody at RCN. If you call us up with an issue, a problem, something you need help on, we're going to give you the time to help you. So if it's on one of these things on the screen, we love it. We encourage you to reach out to us on it. But if it's anything else in your business, hit us up for those two. We just love talking to you guys and helping you work through your problems.
Right. So one of the things we were talking about earlier is we do have free training on all of the loan programs and process and guidelines, all the stuff we didn't cover today, right? So if you're like, hey, this is cool, I want to learn how to do this with RCN, great. We're not going to talk about it today in the next 18 minutes or so that we have together, and that's fine. That wasn't the point of this. But you can go and learn all of that at your own pace with Amplify. So if you want to go and get set up, it's amplify@rcncapital.com to get access to it. You can also reach out to any one of us if you don't like to follow directions. If you have any questions, feel free to reach out. You'll have our contact information in a second. And then we've got a whole bunch of courses in there, different loan programs, parts of the process, some parts about how to generate leads, which is something that we're trying to spend a little bit more time and effort on. Honestly, I might take some parts of this and try to go make a course on it and put it available in there, because this is a new angle that I haven't really talked about before. But we've gone into like document collection on there. We've gone into a little bit of organization, a lot of these pieces, right? This is really helpful to have up while you are talking to a client. So if you know that you're talking, for example, about long-term rental programs, you can have the long-term rental basics program as a course up on your screen right there. And so when the client goes and says, hey, what's the FICO requirement? You scroll a little bit and you go, the minimum FICO is 680. The minimum FICO is 680, right? Makes it nice and easy. So even if you don't have everything memorized yet, you can have it in front of you, you can return to it. Same thing, we have loan programs on the website. You can always check them out there, but Amplify goes into much more depth, right? Now, if you have a lead or a loan, here's what you go and do, right? You reach out to us, we'll go through a little bit on products, we'll go through a little bit on pricing, we're gonna talk through the scenario together, we're gonna go through and price out the deal together if you haven't already done that, and then we're gonna go through and talk about any issues, any questions, and we'll get all of this stuff over to a loan officer, right? They will actually help you with getting everything closed, they'll help you with all of the documents you're gonna need, all of that part of the process. Again, not going to go into super heavy depth because that's not the point of this. The point of this is to help you guys drive more leads in your business and actually get more of those moving. Now, before we dive into the last couple slides, just a refresher, this is what the loan process looks like. Figured I would show it again in case anyone didn't remember it from a few slides ago. So you just go and get an initial quote. So you can quote that yourself if you get access to the software, which you should because it's free. Once you get that initial quote, then we can move forward to application. Then we're collecting documents. Then we're processing, which usually is figuring out some kind of like preliminary issues, double checking all the documents, making sure the stuff works, all of that. And then we dive into underwriting, closing. Now we dive into servicing. We service the loans ourselves on all of the short-term stuff. Some of the 30-year loans get serviced externally. So that gives us a lot of flexibility in terms of what's going on there as well. So even as the client is paying through their loans, we've got everything handled. And the last two slides that I want to show you guys, this is the contact information for me and my team. And this is the contact information for Jacob and his team. If you have questions about RCN in general, reach out to us first. Me and my team can go and get you set up. If it's something we'd rather have Jacob and his team set up, we'll make sure to go and reach out to them and we'll go and pull them in. But I wanted to put the names and the contact information on the screen so you guys can see. You guys even get to see everyone's smiling faces, so you can go and start to recognize people and you start to see like who is the person on the other side of the phone, right? Any one of us are happy to help you. If you get confused, reach out to anyone. But at the start, you can reach out to bisdev@rcncapital.com. It comes to me, Nate, and Andy. And then if we have anything that any of us can't handle, I'm going to reach out to Jacob and his team and kind of pull them in to handle anything from there. So on that front, Scott, this might be the first time ever that I have ended a webinar early.
You're welcome.
I believe you're right. It is. I've known you for years, and I got to tell you, man, you got 14 minutes left on the clock.
Woo! Never done this before. I'm a little nervous. What do you do now?
That was a great presentation. I've sat through a lot of your presentations, guys, but this was really good. There's a lot of great information out there, and I love the calculator that you guys are putting out there too. It kind of gives all the questions that everybody needs to ask as they're putting a deal together. So it's cool stuff. Guys, we still have the gentleman here for a couple more minutes. If there's any other questions, please throw them my way, and I'll be happy to bring you on so you can talk to Jacob and Steven and ask those questions.
If not,
we'll get a minute or two.
Have to sit here and look at us for the next 13 minutes until we hop off.
There you go.
So you're better off asking questions.
As I mentioned, this is recorded, so I'll get everybody a copy of this. Gentlemen, I'm going to get you everybody who is on the webinar today so you can reach out to them directly, get the presentation to them directly. Here we go. Jay wanted to know about your corresponding program.
All right. So
Jay.
our,
Here he is.
oh, you're trying to bring him on the mic?
Yeah, Jay, are you there? I'll bring you on directly so you can speak with Stephen directly. Are you there, sir? There he is.
Yes, can you guys hear me?
Yes,
Yeah, we can
fire
hear
away.
you.
Yep, go right ahead.
Hi, Stephen. I had a question about the corresponding program that RCN has. Like, can you tell me about it? And like, when should brokers consider it? Like, should we stay brokers, or like, at what point should we go ahead? And how is it different than like brokering like regular loans?
So I'm going to cover the basics. But Jacob actually also sets up correspondence for us at RCN. So he knows a lot more of the nuts and bolts that I do. But the basics, when you first come to RCN, if you have been lending your own money, feel free and we can dive right into the correspondent program, right? Like you've already handled a lot of the stuff that we would normally cover, and we can dive in from there. We're going to ask you like, hey, what's some of the stuff you funded in the past? Like, do you have an example of some of the loans you've done? That way we get a feel for like how you're doing, evaluating risk and all these kind of things. But most people should start as brokers, right? There's huge reason for that. One, you don't take as much risk, right? But with all of this stuff, when you're a broker and you make a mistake, you can turn around and you can blame it on the lender. When you're a correspondent lender, the client doesn't know. And for those of you guys who aren't aware of it, the correspondent program is effectively white labeled. So the client never hears about RCN Capital. It just looks like it is you funding the deal. So it's Main Street Capital doing the deal, funding the loan. That's what everything looks like externally. So the client never knows that RCN is actually underwriting and funding the deal, but you're the one who's talking with them about everything. You're ordering the appraisal, you're collecting documents, you're explaining things back and forth with them. So any issue is on you as part of the correspondent program, right? Obviously, we're going to try to help you behind the scenes, but from a client and relationship management standpoint, it's you. You're the only one that they know about. So you've got to really know your stuff, because you can't turn around and say, hey, let me ask the lender, right? Because they're going to be like, I thought you were the lender, right? So I recommend that people don't start that way, because I think that you should get practice in first. Now, if you already have a ton of experience, that's its own thing, and now you just have to learn our specific guidelines and practices. But you've got a bunch of experience with closing loans, with lending your own money. That's a slightly different story. There's a lot of different nuance we can go into with the correspondent program in general. Did you have specific questions with it? Because Jacob and I can talk for probably a couple days on it. So.
No, main was like, how is it different than like white labeling, like some of the other lenders
Yeah,
give?
so let me jump in because I might be able to create some more clarity here. So one of the things that we really think about when we're talking about a correspondent lender with RCN is, do they have experience when deals go bad? And that's really what we're trying to look at. Do we know how to rectify those? If they're delinquent, can this person help us get them back on track? Do they have alternative outlets if this is the case? Really, just like Stephen said, lending your own money is really the baseline. Now, what we are working on in addition is a route for brokers to graduate into CLs with us. These are going to be definable actions, milestones, and things like that. So it's a clear path to be able to level up onto the correspondent lender program. Now, what I will say, if the white label closing is something that you're really concerned about, we have a white label broker program as well, which will get you that closing under a generic third-party name without the same risk of being an actual correspondent lender. Because like Stephen said, there is more responsibility, there is more risk, but there's also more benefits with being a correspondent lender as well, because we're trying to offset some of that expectation as far as workload and just your actual involvement in the deal. So I hope that helps paint a clearer picture. If you want to take it offline, I'm also happy to answer any other specific questions you may have.
Oh, that was good. Thank you, guys.
Yeah, happy to. While we're grabbing the next question, I did get a reply back from Roberto from our closing team, and he said that on the international closings, we don't have any issues, requirements about the individual in terms, we don't have any FICO score requirements or anything like that. So if we can go through the legal process of working with their local notary, which shouldn't be an issue, then we should be good. There's no issues, and he was actually confused when I asked him the question. He's like, I don't see why that would have any relevance to all of this. So if you've seen me looking down at any point and messaging back and forth, I've been checking with Roberta. So we did get that answered, but if we have any other questions, Scott, we can dive in.
Sorry, guys, I was on mute. That was the last question that popped up, gentlemen, and I haven't seen anything else come across the question board. With that said, I guess we'll let you guys go for this afternoon. As I said earlier, great presentation. I learned a lot of stuff, and I learn a lot of stuff every time you guys present, so this was really good stuff. This is recorded. I'll get it to everybody. Just shoot me a text message or an email. Let me know where to send it. I'll get it to you, gentlemen, also, and then I'll make sure you get the list of everybody who was on today so you can reach out to them directly.
Amazing. The only thing I ask from the rest of the audience, one, if you have questions, you let us know. But more importantly, if you have other topics or other things that you would want us to cover in the future, that can be like, hey, you want us to actually go into programs and process and guidelines for some reason, you want us to go into that live, that's fine, we can do it. But if you're like, hey, I'm really struggling with hiring and training employees, I'm really struggling with like getting the deal flow to be consistent, I'm really struggling with marketing, you let us know what you would want to learn. You've got our contact information up on the screen. I've had Jacob's up there for a while. You can reach out to me. There it is right there, S. Ballard at RCN Capital. You can reach out to BizDev and that'll go to my whole team. Let Scott know. Let us know what you guys want to train about. Because ultimately, the way that we do it is Jacob and I sit down and we go, okay, what questions have we been getting a ton from a lot of the brokers that we work with? And that's how we decide on what we're going to present on. So if you have specific things you'd want us to cover, let us know and we can dive into much more depth. I have talked about most of these topics. I've talked about most topics that I've done webinars before. We can dive into these at much more depth than we did today. Any one of these topics we can make a whole webinar about, right? So if there's something you're really struggling with in your business, let us know and we will design stuff for you because we work with hundreds of brokers just like you. And so we've probably seen the issue before in closing somewhere around 40-ish thousand loans at this point in the last 15 years, right? So, you know, and I didn't bring that up to brag or anything. Now it seems like I'm bragging, but we bring that up just to say like, hey, a lot of these problems you're going to run into, like they're not unique, you know, they're not crazy. Like even international closings in Israel, I was like, yeah, I don't know it off the top of my head, but I know we've dealt with this, right? So if you have problems in the business, let us know. We will happily either sit down with you to talk one-on-one, or if a bunch of you guys have the same problem, I'll talk with Scott and we'll say, hey, can we throw another webinar together or another group call together with anyone who's struggling with X topic, right? And we'll be happy to do that for you guys. And that's it.
Yeah, that was great, Stephen. And again, you know, and Jacob too, just use these guys as a resource. They're not just a lender. This is a relationship that they want to build with you guys. And if you can't tell, they're really good at what they do. More importantly, they love to teach, which I've seen that over the years, and they really enjoy it. So if there's stuff that's sitting on your desk and you just have questions about or need help with, you know, let us know, and you know, I'll make sure these guys get back on and address those specifically. But yeah, always a pleasure, gentlemen, and you know, we're excited to have you guys on.
Absolutely. And now I'm excited to hopefully be at the conference this year. Last year I had some issues that I couldn't make it, so this year I'll be back, and hopefully I get a chance to talk to you guys before then.
Excellent. Yeah, looking forward to it. Very good.
Everybody. Yeah, appreciate the time.
Thanks, gentlemen. Have a good afternoon. Thanks, everybody. Take care. We'll see you guys next week. Bye-bye.